Hello and welcome back to the Property and Lending Podcast. Joined with me as always is Fadi and Mark, and I'm not going to ask them how they're going because they asked me not to ask them, so we're not going to do that. But we've also got a very, very special guest on with us today. He's the National Business Manager of Nectar Mortgages. He's also the host of the online broker Think Tank, and he's helping build better broker businesses. He's also the reason Fadi became a broker. So we've got a very, very important guest. Very excited to have him. We have Andrew Stevens from Nectar Mortgages. How are you, mate?
Yeah, very good, very good. It's good to be on.
Thank you for coming on. Fadi spoke very highly about you, and I think he was having a little bit of a crush on you. We were talking yesterday at soccer, and just Andrew this, Andrew that. So, Andrew, do you want to just let us know what you do, what's going on, and we'll go from there.
Yeah, sure. Well, first of all, the feelings are mutual, Fadi. I've been obviously known Fadi for a while, and it was around when he first became a broker and was working with him then. And I've had the incredible privilege of sitting back and watching his journey, both personally and in business, and watching him grow. It's been amazing, very inspirational, and is one of the good things. And I think this is important to anyone who's in business or anyone who's wanting to achieve anything, is finding some good people around you that you can be open and vulnerable with and talk about anything with. And Fadi's definitely one of those people with me. We've had some wonderful conversations over the years. So thanks, mate. As for myself, so yes, I'm the National Business Manager for Nectar Mortgages. Nectar Mortgages is a sub-aggregation group. We have around about 120 brokerages Australia-wide. My key role there is to help brokers, build a business and a journey that works for them. Our key philosophy at Nectar is that we want to get better outcomes for your business, but also for your life. So it's a little bit unique in market where most businesses are quite driven by the how much you're going to settle each month and how much money can we make off you. Where we hold the view, and I personally hold this view, that you should go into business because business should give an outcome for your life. And sometimes people forget that, and business becomes their life. And it's never meant to be that. It's meant to be this completely different entity that contributes back to you. And in addition to that, I'm very passionate about the mortgage broking and commercial asset finance broking industry. So I do run the online broker Think Tank, which is an online platform which we use to promote different tools, resources, ideas from within the front line of brokers to help each other and collaborate together. It's been a fun journey.
Amazing. So there's a bit going on there. I know Fadi, obviously he's ready. He's ready to talk to you, mate. So I'll let Fadi jump in, and me and Mark will come in a bit later.
I just wanted to say, just going off what Andrew said, like I remember I was an accountant when I first met him, and we met at St. James Hotel right in front of on Castle Ray Street, in front of my old job, Stockies. And the journey just pretty much started from there. Started with Aussie Mortgages, but I guess one of the things that you just mentioned in regards to like business and growing, it's not just about the business, it's about the lifestyle as well. And something that you brought up from our first meeting, that when we first met, how's it looked in the last 2 years? Obviously, we try not to mention COVID as much on here, trying to blanket. But how's it looked in your experience? You're dealing with a number of brokers on every single day. Have we seen brokers leave the industry? Have we seen brokers join the industry in this sort of period? And also, I guess I'll save the second question, but I'll start with that one.
No, good question. Look, I guess some of the trends that I'm seeing at the moment, and this is right across business, so not specific just to mortgage brokers, is the world has been disrupted. And so we always talk about disruption, and we usually associate it with technology. So, for example, we can talk about how Blockbuster was disrupted by Netflix, and ultimately the reason why Netflix was able to gain such great growth was because it was just so easy to use compared to going to a actual Blockbuster store and picking up an actual physical DVD and taking it home. So pressing one button made it easier. But it's not actually technology that disrupts business, it's changes in human behavior. So if you ask me what I've seen change over the last 2 years, and I'd say maybe even the last 3-4 years, but COVID, which we don't speak about, has really fast-tracked, is human behaviour has changed, especially in those under the age of around about 35, in what they look for in a business they want to deal with. And some of those key things is, traditionally, big brands ruled. So if you were a large bank or you were a large religious organisation or a political party, it was seen within within your community that you were the trusted person to go to because you had the brand. And what we've seen is this dramatic move in that under 35s where people no longer trust a brand just based on it being a brand. They want to know who is behind that brand, and they want to know that that person is authentic, genuine, real, approachable, and that they can see themselves as a part of that tribe, or that's someone they can relate to. And we've seen the rise off the back of that of the social media influencer. But what it has meant for business is more than ever before, as a business owner, you can go direct to your consumer without having to have, I guess, elaborate spends on branding and marketing like you used to. And so we've seen it in the broker market is probably a very clear one where we've seen market share increase to 70%. So most Australians now will talk to a mortgage broker before making a major financial decision rather than go direct to their bank. And this is replicated across the political sphere, the religious sphere, business, is people want to deal with people they know, they like, and they feel like they can connect with.
I think I can see that as well, coming from more of an old school, if like our parents, for example. Like when I got into the industry in the beginning, like when we used to meet up with, not so much older people, but people that have been with their banks for more than 20, 30 years, like, nah, CBA is my bank. CBA is always going to help me out, or Westpac or St. George, whatever it may be. I'll just go see them. But what you mentioned is that we have definitely seen a shift. Maybe it's the new generation. Maybe they're just a lot more smarter than we are, and a little bit more research. They've got access to a lot more on the internet now, where you're right. People are beginning to realize like there's a whole lot more options out there, especially, just in regards to brokers. There's 70% of Australians are going to see mortgage brokers before they even go see their existing bank, even give their existing bank a phone call.
It's about accessibility. I've got a friend of mine who drives an Uber, and he's a good mate of mine, great guy, Denny. And he probably will watch this. So if you're watching, it's good to just a shout out to you. But
This gained another listener, so perfect.
Yeah. So he drives an Uber, and he was expressing to me one of his biggest challenges right now is when young people get into the car, what music to put on. Because traditionally, like even 20 years ago, even when we were growing up, we're all around the same age. You listen to whatever music was in the top 30 that was on the radio at the time, and that was controlled by music producers who decided who was going to win and who wasn't. Where what's changed now through the internet and through TikTok and YouTube and all these other platforms is good talent can go direct to the consumer. So what's actually happening now, you've got young people who jump into an Uber and they want to plug their own phone into the system and play their own song list of random people that they like that no one else has heard of. But this, I think, it's a great example of how people are now consuming into the future. And when it even comes to financial products, it's no longer, well, I'm just going to go to Aussie Home Loans. And Aussie Home Loans is a good measure of this. And I heard recently in their brand recognition surveys, in the under 25 group, the brand recognition was only 6%. Now, they used to have like 90% brand recognition, or was right up there with the big four. But in that generation, that's coming through now that will be the future purchasers of property and future business owners. They want to know who you are, and they want to deal with the brands that they know who's behind those brands. And so smaller brands like Power Loans, for example, can get cut through now by doing things exactly like we're doing right now, which is actually putting a face out there and saying, hey, this is what we're about. These are our values. This is what's important to us. And people resonate with that and say, well, actually, I like Fadi. I like Mark. I want to deal with them.
And with in regards to, I guess, banks, I think this is more of a controversial question in regards to banks, and we even include real estate agents as well. In the last 2 years, and I think you and I have had a conversation around this, and I've definitely had a conversation with KM and Mark. What's actually boiled my blood is in the last 2 years when COVID hit, and prior to COVID, we were happy with rates of 3.79% for 3-year fix, and that was an incredible rate at the time. We had a few customers sign up to that as well. And the same thing with real estate agents, they were the go-to people. But getting into the industry, starting my own business, dealing with like a buyer's agent like KM, for example, and with real estate outside as well, I just feel the last 2 years, banks have just like, how do I say it? They've attracted customers that weren't able to afford, weren't able to borrow prior to COVID, gained their business throughout COVID, and then now we're seeing a shift where those customers are not able to service those loans no more, or they're going to start struggling with the interest rates going up. Now the buffer rate has gone up from, what was it, 2.5% to 3% now, and there was always talks about we're not going to see any changes until 2024, which gave more people. And I know a lot of my customers were like, oh, we've got enough time to get a raise, maybe grow our portfolio a little bit, gain another income from another source. Me personally, I used KM, I used First Brick in regards to purchasing my own property, because after 3-4 months, and KM was actually coming to me with a lot of the auctions, trying to help me out, I was done with real estate agents. Like, I just don't trust the LJ Hookers. I don't trust, whatever it may be. I'm not going to start mentioning names, but I just don't want to deal with those real estate agents. But you're exactly right. I know KM. I've dealt with him. Authentic. I can have a conversation with him, and I feel that he cares. And he's actually taking care of that for me. Even though I have to pay a fee, I've saved myself on the purchase of the property. And the whole process was a whole lot more better, where I actually felt good about myself. So I guess what I'm asking is that, how do you see the last 2 years and how the banks have kind of pretty much attracted customers in? Because you probably already know this, working, taking care of Nectar. We've had customers prior to COVID, we had to turn back and say, sorry, you can't afford this property. We just need to save a little bit more, maybe wait a couple of months. COVID hit, rates went down, all of a sudden they can borrow that and more.
Yeah, it's just, look, I'm not an economist. I'm not going to pretend I am. But what I will say is every economist I've ever listened to has got it wrong at some stage. And we're definitely finding ourselves in a position where interest rates are increasing, cost of living is dramatically increasing. And there's a lot of external factors which some are permanent, some are not. So it'll be interesting to see what the next 2 years hold. But you definitely, I guess the needs of our customers have definitely changed. And I think that's also why we're seeing more people than ever before go to a mortgage broker. There's the way a human's brain works. And this is why I don't think we'll be disrupted by technology. It'll be interesting to see whether this actually starts helping people use like buyers advocates and people in that space, which overseas they use all the time. It's an Australian thing that we don't understand the value of it. Is even if I know enough to make a decision about what I need to do, I want validation from another human. And that's an important part of the human psyche, is to actually have that. Now, technology can't replace that. And in a lot of ways, the expertise or trust is not there in the bank. So what I can say in response to what you're saying is, more than ever before, professionals who can actually give advice and actually understand your unique circumstances, you need to find one, and you need maybe find multiple people who you can bring around you as a bit of a support team to help you through a time like this as you do. Because look, there is some options out there, but just because you can do it doesn't mean you should do it. And unfortunately, the main difference between, and I can say this without getting sued, I've already checked with a lawyer. If you go to a bank, it's their role is to sell you their products. They will provide you a product as long as it's a not unsuitable product, which means they can justify it. They can sell you their products. If you go to a mortgage broker, under legislation, they have to act in your best interest. They have to give you a recommendation that's in your best interest. And that's the difference between going direct to a big brand bank. You're just a number, they see you as a person they can sell a product to, rather than going and getting tailored advice or tailored recommendations that's in your best interest from the likes of, you know, a mortgage broker, or even in buying property. They talk to a property expert. Go talk to a buyer's agent. Talk to somebody who knows the market, who's working for you. That they're only going to win if you're going to win. And find someone you can trust. So even if you do know what you think you should do, it's best to have someone say, yes, you are correct. So then at least you know you can move forward, rather than finding yourself in a position where someone's taking advantage of you.
And it's always interesting, like you've mentioned that when you go directly to the bank, they just have to make sure that the product is suitable for you. But when you go to a mortgage broker,
no, it doesn't have to be suitable. It just has to be
unfit.
Not unsuitable.
Yeah, unsuitable. Sorry,
Not unsuitable. It's a silly term. It means well. It's not saying it's suitable, but it's certainly not unsuitable.
Yeah. Kay will probably put that on TikTok. We get a few traffic coming towards my frog doing. But when you go to see a mortgage broker, we're obliged to provide a minimum of 3 products, 3 different lenders. Where personally, when I went through to get my own loan, I just wanted to see what the process would be with a bank. The amount of work that brokers put in, especially in regards to looking after their customer and giving them more of a whole lot more of an overview compared to if you were to go directly into a bank, I think it's beautiful. Like, obviously, we do a lot more work, and I enjoy that work as well. So does Mark. But it's interesting to see that, especially when the Royal Commission came through about trying to get rid of brokers, where banks were solely just giving their sort of product, where brokers were going above and beyond in regards to finding the best sort of solution for your customer as well. And I think the same thing goes by a buyer's agent as well.
Well, because I think and I think there's one particular big bank, I'm not going to name because they've got lots of money and they can sue. As in they were very, very vocal during the Royal Commission about trying to inhibit the mortgage broking industry. And the reason being was the mortgage broking industry allows consumers to get direct access to other lenders that may not have the marketing budgets and the pretty ads that some of the big banks have, or can compete in different areas than the big banks can. So it disrupts their monopoly. So that's why they don't like mortgage brokers. Mortgage brokers provide choice and competition in the marketplace, where if you just had the big 4 banks and doing what they want to do, they would quickly get rid of all the other banks as well. And that's not good for the consumer. And that's, it is the reason why mortgage brokers play such an important role in not just looking after the customers, but actually keeping a level playing field in the industry, where if someone does have, there's some really good lenders that have very specific niches for, say, self-employed people, for example, where some of the big banks won't look after them, and they're good customers, and they do have the ability to repay loans. They can still get a loan. So I think it's important, even just from a competitive perspective, and allowing consumers to have choice. That mortgage brokers are out there promoting brands or banks that may not have that same cut through.
And it's so important with, I was just going to mention, just 2 particular ones that have come up for me recently. I had a customer, that first home buyer, walked into one of the big banks that don't have the first home guarantee scheme. It was never mentioned that they could only purchase with 5% deposit, have LMI waived, have stamp duty waived, all that sort of stuff. None of that was mentioned because they don't have that particular product that they can offer. They came to me and they were so surprised that they only needed 5%. They thought, the whole time I was trying to convince them, it's actually only 5%. This is how it works. Government guarantees 15% and so on. So that was one particular thing. The other one was a guarantor loan. So banks that also don't offer guarantor loans, we have people that are entering the market with literally putting, maybe just covering the legal costs, maybe just covering 2-3 grand out of the property, and you're purchasing for $1 million, for example, because we're using a guarantor loan. And again, if you walk into the branch that doesn't offer guarantor loans, it's never going to be mentioned as an option. Whereas if you come to a broker, all of these things are mentioned to you. We talk about structures with the guidance of their accountants and all that sort of stuff that, again, doesn't get mentioned if the bank doesn't offer it. So, 100% agree.
And it's why I don't, within our industry, I've heard some people get concerned about, comparison websites or or direct lenders or neo banks like Lendy, Wealth, Athena, etc. It's really interesting how a lot of those places now are moving more and more into the broker sphere as well, like Athena, for example. And part of that is you can't really know what a customer's genuine needs are and make a recommendation unless you have all the inside information on how actual lenders work and their appetites for things and what they can and can't do. Credit policy is not black and white. And then there's a whole lot of unspoken stuff that sits behind the scenes that we find out the hard way that consumers will never know and will never be presented to a consumer, even through a comparison website, let alone if they walk into only one lender. Little things like, postcode restrictions in particular areas, or in a development that a certain bank's going to only have certain exposure to that particular development, and there's all these little key things. Or with ING, for example, how look, they have a fantastic product. Big fan of ING. But if you're someone who wants to build out an investment portfolio, you're not going to be able to access as much equity from that property to purchase the next property based on their policies. So having an understanding of where somebody wants to go first before actually directing them to the right product is really, really important. But I think that's also the future of, as technology plays a role in making things easier. So we're about 18 months away from open banking really coming alive within our industry. And what that will mean is, a consumer will come sit with a broker, and with not all lenders, but some lenders. You'll ask for their driver's license, get their name, their date of birth, and their driver's license number. And as you're entering that into the system's already pulling their credit report, working out their living expenses based on their bank accounts and their likeliness to be able to make a repayment. And giving you, the actual broker, a percentage score of what's the likeliness of that loan being approved, pre-populating most of the information. Now, for old school accountant, mortgage brokers who their skill set was, I'm really good at completing complicated bank forms on your behalf because banks are hard to deal with, some of that will start to go out the window. So what is left? And that is the ability to provide reasonable recommendations and advice in someone's best interest. Really deep dive into their situation and understand the nuances of what it is to be human and have needs and want to grow. And then understanding what banks actually have an appetite for what. That can't be outsourced. It can't be. I was talking to Ben Shapiro. If you ever get a chance to have a look at him, he owns a business called De Niro, and he's a lecturer at Swinburne University in social media analytics. Really super smart guy. And he said even the issue with AI and deep thinking algorithms and open banking and all this data is there's still no one there to give it context, and it can get it wrong. And there's this whole element of what it is to be human that is not factual. What you value and what I value can be very different. And I'll just give you a quick example. I remember I had two customers come to me, husband and wife. Wife had a property in her name that was left to her by her father. And to buy their dream home, all she needed to do was sell that property. And the husband was like, I don't understand. You sell the property, we get our dream home. And in her mind, selling that property was just not an option because the value of that property to her, because it was left to her by her father, completely outweighed any value that a valuer could put on it. That kind of human understanding, you can't work out with an algorithm.
I completely agree. And like from a person not as a mortgage broker looking on the outside in, I mean, everything you're saying makes so much sense, and it just makes sense that you would speak to someone who's got multiple options, right, rather than going to one option. I remember when you were mentioning a particular bank, unnamed bank that was trying to push out brokers. I guess I remember during that time I was actually on the state board. I was on the New South Wales board of PICA, Property Investors Council Australia, and we were like very much pushing the news out to to the general public that this is what they're trying to do, and they're trying to get rid of mortgage broking as an industry, really, and it just didn't make any sense. And I remember the PIPA sentiment survey that was just recently released. The industry professional that was most used by far was mortgage brokers, more than accountants, more than solicitors, which I found surprising because you need them, like, legally to buy a property. And it was insane. And I think that people understand that. And, you know, when you're touching on technology and changes in human behavior and how it helps, but it's there to help you, but not replace you. I mean, in my space, there is, I won't mention the name of it, but there is a program where you type in, I want, 6% growth and 4% yield, and it'll search all the listings on real estate or whatever and pop out a property. And I look at it as a buyer's agent and think that's so scary, because you can be making very, very big mistakes purchasing a random property in a random street in a random state in the middle of nowhere, where you're going to get those numbers, but there's so much more to it going forward. And if you don't understand the person's financial situation and where they want to get to, and like everything you're just talking about makes so much sense. Me and Fadi and Mark, we all work in the same space, and we all have very different property goals. Me and Fadi have very different relationship with debt. I love debt. Fadi doesn't really necessarily love debt, but if you just put in those numbers into a computer or a program and it spits out something to you, it just doesn't make any sense. And just regarding, like, speaking to brokers over, a particular bank or two, you don't know what you don't know, right? So if you don't know that there's many options, and what Mark was saying with his customer, if you don't know what's behind the scenes or what's going on, you're never going to know. You're only going to know what that one institution is providing you. So it makes so much sense. The conversation around human behavior is very interesting for me. It's very cool. I was going to ask, looking forward, what do you see, especially with the people under 35, like you were talking about moving forward, and the suspected interest rate rises and inflation, because people under 35 are in a kind of bracket where we've never really had to deal with economic hardship. We've lived through economic prosperity our entire lives if you're under 35, and we might be going into a time of it's a little bit harder. How do you see people's relationship with money for this particular group moving forward? Do you see major changes, or just kind of wing it till it's over?
So look, and anything I'm saying from here on is pure speculation. It's just a version of my opinion. But probably the key thing is changing expectations. As in, I think our generation and younger do need to change expectations of what they can buy for the money they have, first of all, and even what their lifestyle might actually look like moving forward. One of the key things for me that I see, it's an issue within Australia that isn't prevalent overseas, is just a hatred for living in apartments. For example, everybody wants the white picket fence in the backyard. And that's very, very expensive. And it's actually what's part of the issue of what's actually driving up property prices in Australia, especially in the major cities, is people's desire to live in houses with backyards. We as a generation, we either need to start looking to move into apartment style living to make it affordable, or we need to move into regional areas, which is going to be challenging. Although I think one of the things that the last couple of years has taught us is remote working is an option. And I also think moving forward, the way people work will change as well. Traditionally, it's always, you get one job, you try to stay there for 15, 20 years, you get the watch on the way out. I think what we'll see is people develop very unique set of skills. And because of their ability to go direct to consumer, you might find people jump from job to job to job a lot more often, or even have multiple jobs at the same time. So there are a lot more entrepreneurship, a lot more people who may contract themselves out to multiple people to get a job done, or because they have a particular skill set. That, and especially that in line with being able to work remotely. or work while traveling or whatever it might be, I think is probably another major trend that we're seeing that's going to change our relationship with money, because you're going to be able to live, you're going to be able to bring down your cost of living based on where you are, and you're going to be able to earn money differently to the traditional way where you work 9 to 5 and you're really good at, when you first start a job, it takes you 8 hours to do your job. Eventually you figure out a way to do it in 3, but you're still working 9 to 5 at the same place. And so you get good at, I don't know, something else for 5 hours, like talking or hanging out the back or whatever it might be. I think, as we get better at stuff, there'll be more opportunity for people to spend more hours of the day doing other stuff that's also productive and brings in income. And then the other key thing, and I say this to mortgage brokers specifically, there is a new model of mortgage broker now where traditionally it was I own this community, all my referrers are in my local community. I have relationships with the local soccer club, and I'm that that hub of that trusted advisor on the corner that people come to where you can have a completely digital business now where your customer can be anyone in Australia. And you can actually create an online community now, which you wasn't there before. And that's for those people who want to explore that, that's a really good option to build a business out of.
I think it was interesting as well what Kane was saying in regards to, and Andrew, if you were to go to a certain lender, like KM, correct me if I'm wrong, if a customer comes to see you and their strategy, and we talk about strategy on this podcast quite a bit, their strategy is, I want to start growing my portfolio, I want to be purchasing a number of investment properties. You going to the wrong bank or going to one specific bank without looking at other options can affect you getting those properties, and it can, kind of stop KM or a buyer's agent in general to continually purchase those properties for you, because like you were saying with ING, it might be a little bit more harder to grow that portfolio. With other lenders, their borrowing capacity might be a lot more lower than other lenders they can go to that will allow you to purchase for a little bit more, or allow you to, like a few lenders right now, I think the norm for the last 5 to 10 years was 80% of rentals taken into account. But now we're seeing lenders take 90% if that if that property is actually currently rented out. If you've actually got someone in that property, they're taking 90%. So I think it's so important in regards to going to see someone, not just one party. Go see someone that has access to quite a number of lenders. And on top of that as well, when you say, when this new generation came through, it freaked me out because I've got no idea what they were talking about or the technology. I can barely log onto this Zoom call, WebEx call.
Took me 25 minutes, I think.
And that's why you said, we're at the same age. These boys are a little bit more younger, so they're a little bit more tech savvy. But you're so right in regards to these guys. There's this new generation coming through. Before, like personally for me, when my dad goes, you got your first job, you have to stay there as long as you can. You have to work yourself up into the business. But right now, and including my missus, like she was having a hard time in one of her last roles. I'm like, hey, I truly believe we live in one of the best countries in the world. You need to find somewhere that's going to make you happy, mentally healthy. You get up wanting to go into work, etc. And I think that's one big aspect one big change we're seeing in the last couple of years, where no one, especially when you say there's a lot of entrepreneurs as well, no one's going to stay put. No one's going to tolerate doing those long hours, not earning as much, etc. And I think that's very important to mention in regards to, there's so many options out there. It's not just mortgage brokers, buyers agencies, whatever it may be. Living in this country that we're in, which I truly believe is one of the best countries in the world, we've got those options out there.
Exactly right. Two things. One, I had a conversation with Zarko from the MFAA the other week, and he gave this great piece of advice. We're talking about investment strategy and how the key to winning at investment is diversification. He said it's not just diversification of investments, it's diversification of counsel, as in being open to more than one opinion or one way of doing things, and having more than one advisor in your pocket. As in, you don't just listen to your mortgage broker. You need an accountant. You need multiple people in your life who can talk into your life. And I thought that was really, really wise. And to your point around working and the future of careers, and this freaks me out for my kids, is the jobs of the future don't exist yet. There's not last year, the year before last. So it's just as we're going into COVID, more people graduated with a degree in India to be able to do accounting in Australia than there is actual accountants in Australia. So,
Wow.
so if you're at school right now and you're thinking, I want to be an accountant, as in, and, with robo advice and being able to offshore things, as in, whole entire industries are going to be disrupted. But for that, finding something you're genuinely passionate about can be very, very difficult. And the advice I'll give around this is, you actually become more passionate about the things that you put more effort into. Sometimes people jump from job to job to job, or from hobby to hobby to hobby, trying to find their passion. And from a psychological standpoint, you may not find it. But if you do find something that you're good at, and that actually gives a benefit to you and your family and those around you, and is a healthy decision for you, and you invest time in that, it actually develops more passion for that and allows you to enjoy it more. So it comes hand in hand. And I'll ask you the question, Fadi, because I don't have a healthy relationship with exercise, for example, and it's something that you found. But I'm sure when you first started, it wasn't easy.
Not at all. I was trying to walk when I first started without feeling pain into my knees. But I completely understand. I think when we first met, how many jobs was I doing when we first met?
Yeah.
I was doing mortgage brokering, trying to start a cleaning business, doing security. I was delivering flowers, wherever it may be. But I was going from job to job to job, and everyone's like, "Oh, what are you doing? Like, you need to settle down." And I'm like, I don't know what I want to do. Like, I need to be doing something with purpose. I need to be doing something that I feel good about. Like, if I'm going to wake up each morning to go do something, to earn an income, for me personally, I need to be comfortable with the fact that I can do this on a daily basis and I'm happy, and it's going to help my mental health. It's going to give me my time with, for fitness, or trying to, just be, I guess, healthy. I think that's where it all started with me, is just to make better decisions in regards to my health. And from then on in, it just led into everything else in my life.
And that's the hardest thing, is to actually prioritize self.
Yeah.
It's the biggest challenge I see with business owners, is, and especially with men. I'm going to pick on men for a bit. Typically, we get our identity from what we do and not who we are. So if I ask you who you are, you usually say, I'm a mortgage broker, I'm a father, and you start talking about all the things that you do. But what you don't talk about is your skill set, your value system, your health, all those things that actually make you you. And what you're meant to be doing, a healthy relationship, is where you take you to work, or you take you to your business, and you give of yourself to your business. But you only can give of yourself what you actually have, and what you've actually built up and developed and spent time doing. So that's including your health, your education, your skill set, your drive and passion. That's what you take, and your values. That's what you take to work. Most people get their identity from going to work and the successes that they get from work. And the challenge with that, and we see that in the economy that we're going into right now, we don't have much control over that sometimes. Business can change very, very quickly. Economy can change very, very quickly. House prices can change very, very quickly. And if your identity and your self-worth is actually coming from the success of your business or the success of your career, and I see it a lot in like white-collar professionals, accountants, solicitors, that high power kind of role. What typically happens is, as they get older, something occurs that doesn't allow them to work anymore. And it's usually a health issue, a divorce, something like that, something outside their control. Or for some reason, they have a really bad case where they get sued for millions, and all of a sudden they go bankrupt, or someone turns on them. And although they're still the same person they were yesterday, or suddenly they don't have the same prestige or power or influence or success, and they find themselves retired, not by choice. And unfortunately, most of them die. It's something like 70-something% of professionals die within 3-4 years of retirement.
Wow.
Which is just mind-blowing, because usually what they've done to get that success is they've burnt their relationships with people. They've taken advantage of some people. They've neglected their family and their friends. And so when they are no longer a part of the business, they're outside of the business. They don't have that network or that sense of purpose. And that's where I think it's, as much as being successful in business is important, you need some other drivers that you're contributing to in life that genuinely give you a sense of well-being, and that you're contributing to the bigger picture, whether it's charity work, whether it's, your family, whether it's doing something else outside of that, is so very, very important. Because my coach, Peter Gilchrist, he asked this question, which I struggle to answer still. And I ask it now of any person who's, I guess, really driven and highly successful, is if you had a day off next week, what would you do with that day off? And if you can't answer that question, you've got a problem. If you go straight away and go, well, I know exactly what I'm going to do with some time off, how are you ever going to retire if you don't know what you want to do outside of work? But that is scary.
I can tell you what I'd be doing. But yeah, no, I completely understand that. Yeah. And I think that's something that we have to work on as well, especially business owners or just consumers in general, is I think it's they're thinking at the moment more short term, not long term. Like we always talk about super or putting money aside, or tax benefits for the future, or SMSFs. Have a property in there so when you retire, it's, all your taxable income is tax free. But we don't actually think about day to day, or regards to what if anything were to change, what are we going to do after? And I think that's a very important point in regards to think about. Yeah,
especially your health.
Yeah.
It can change everything for you overnight.
Yeah.
So I've been trying to figure out what I'm going to do next week on my day off this whole time. I still don't know.
Just put me in the mountains, bro. Put me in the middle of the Blue Mountains. I'll try and make my way out. That's exactly what I want to do. Try and find my way out of the Blue Mountains.
It was funny when you guys are talking about changing jobs to find what makes you happy and whatnot. I just figured of a friend of mine. I won't mention his name so he doesn't lose his job, but he he's
I'm kidding.
he's employed by someone, and he's working from home. He's been working from home for like 2.5 years since COVID, and then they've brought him back to the office 1 day a week. And he literally said to me, "If they force the second day, I'll quit." And because they just won't, it doesn't make him happy. It just doesn't make sense for him to commute and whatnot. And it's I listen to Gary Vee a lot, and he's very much on the wavelength of happiness and do what you want that makes you happy and pursue it. I was listening to a podcast the other day called How I Built This, hosted by Guy Raz, and he was interviewing Melanie Perkins, who's the creator and founder of Canva, and he asked her, how did you know this was your passion, or this is what you wanted to pursue? Because he was saying, lots of people, we all get great ideas, right? And then we don't really do anything with it. And 2 years later, you see that idea sold on Amazon or something, and you think, oh, if only I did it. And her answer was simple. She said, I just couldn't stop thinking about it. It was what I liked doing. I woke up and I wanted to work on it, and I just wanted to make it better and better. And after 3-4 weeks, I still wanted to do it. And that's kind of like the barrier, I guess the 1 month. If after a month you're still keen, it's probably something you enjoy and a bit passionate about. So it's a very cool perspective that you're sharing there. I completely agree with you, Andrew. I just don't know what I'll do next week though. So
you and I struggle to answer that question. But mind you, I love my job too. As in, it's fun. It's like it's taken me a long time to find a job that I absolutely am in love with, and I wake up every day excited to do. So that does help.
Yeah. Do you want to tell us a little bit about the online broker think tank that you're a host of, and what's that about?
Yeah, sure. And interesting story. And I know we don't talk about COVID, but it just goes to, sometimes you just need to start doing something. I've had a lot of people come to me since. So Online Broker Think Tank right now averages over 200 live participants, up to about 400 or 500 people register. A network now of around about 12,000 people throughout the industry that have some sort of correspondence or connection to it. We've got a closed Facebook group of almost 1,000 as well. And it grew pretty quickly. And even in a short period of time, I was nominated for, or was a finalist for Thought Leader of the Year at the Australian Broking Awards on the back of Online Broker Think Tank. So it's taken off, and I've had people come to me and say like, "Oh, what's the end game? And how did you plan this and whatever else?" And I'm like, well, the reality is, when COVID hit, I thought I missed talking to my mates. I missed having great conversations, and I just reached out through LinkedIn to some of the smartest people I knew and said, let's all jump on a Zoom and talk shit. And hence the first Online Broker Think Tank occurred. And I just kept on doing it and just adding little bits to it and hearing feedback and moving with it until it grew. And look, and really what it is, it's just a platform. So it started off with a belief in collaboration over competition. So compete with each other, not against each other. That's the way forward. And then also recognizing that some of the best ideas and innovations come from people on the front line who's dealing with the problems every day, and not people sitting in ivory towers in head offices in large corporates or in the fintech world who are trying to build solutions. The solutions are out there. And I wanted to give a platform where people had really good ideas, tips, and ways of handling things, could share that with others, and we could collaborate and share best practice. And some great success stories in our industry, like Sherlock or Quickly or Joust, or some of these groups that have kind of been born out from the broker industry of people seeing a need, developing something and creating something. It's been fantastic. So that's kind of what Online Broker Think Tank's about. It really is just a community of people wanting to share, innovate, share best practice, work with others, not be alone. It's completely, there's no cost involved at all. I refuse to take money off people. I've had people offer me up to $5,000 to present on it, and I've said no. I don't know who you are. As in, so it's and I want it to be that free service for people. But probably the lesson from it that I want other people to learn is, if you have an idea, you don't have to have everything worked out before you start. The best thing that you can do is just start doing something. Start somewhere. If you want to start your own YouTube channel, just start it. If the first video is terrible, that's fine. Someone will tell you, and you can improve for the second one. And just keep going. Don't wait for everything to come together, or the perfect set of circumstances. It will never happen. But if you're genuinely passionate about something and you're interested in something, and you've got a voice that you want to have a platform and get that voice out there, just start.
Yeah. And the Online Broker Think Tank, just for mortgage brokers, or do you have random people from different industries joining in? Or
yes,
buyers agents are welcome, bro.
Buyers agents.
That's my question essentially. Can I join?
Yeah. Look, absolutely. And some of our guest speakers, for example, are not within the industry. We've even got consumers in the group. So our professional investors who like to be a part of the group because they find out what's going on. So it's anyone who's connected really to the mortgage broking industry. And plus, there's multiple aggregators. There's some lenders in there, not as many lenders. Most of the time, I won't say that. I was going to say, as in, look, most people who work for a lender are not self-employed. They're PAYG. They've got a target. So their motives aren't exactly, I'm not saying they're not pure, but they're incentivized by, obviously looking after themselves. Where I think the best thing about it, that self-employed community is everyone's looking out for each other and want to grow together. And they're not competing against each other. Look, lenders compete. Not all people who work for lenders do, but as a majority as a general rule, they do. So look, people outside of, if you're in business, or if you have a service that you think mortgage brokers need to know about, come join the group. As in, if you feel you can add value to our industry, we want to hear from you as well.
And if someone wants to join the group, where do they find it?
Yeah, so it's, if you search online broker think tank on Facebook, it's a closed Facebook group, although it will show up. If you choose to join, as long as you agree to the rules, you're allowed in. You can also search it on LinkedIn and YouTube as well. So there's a YouTube channel with some of the videos from previous live webinars that we do as well. So more than welcome to join.
Yeah, beautiful. And I just noticed that you mentioned when you first started, you thought of the smartest people you know when you started it, and I noticed that Fadi wasn't part of the start. So
I invited him.
That was probably his smartest move.
He rejected me. He rejected me. I invited him along. He said, "Oh, no. Look, I've got better offers elsewhere." So
no, beautiful. I don't have any. I think we covered so much. It was really cool. I think it was nice to talk about, from a different perspective, rather than like, how our usual episodes go. So I really liked it. Fadi, Mark, anything else to add to that?
I think that was awesome.
Beautiful. Andrew, I need you to send me a photo of yourself. Otherwise, I'm going to go stalking you and find one. So most of our guests send us a photo so I can use it. Otherwise, I might find a photo from 20 years ago.
it's probably better if you use a photo from 20 years ago. Probably a little bit skinnier and prettier. So go for
it. But thank you so much for giving up some time, and apologies about the movement in the scheduling a few times. I didn't notice I was on a plane when we first scheduled it, so my apologies. But yeah, thank you so much for joining us, and we'll put online broker think tank in the show notes if anyone wants to find it and join Andrew and those people on the group. Hope you enjoyed it as well. Hope it was as fun to talk to as Ben Shapiro. We try our best.
Let me just say, it's Ben Shapiro, not Shapiro.
Shapiro. Sorry, Ben Shapiro.
Different guy.
Yeah, I noticed. I had to think about it. I was like, did you speak to the other Ben Shapiro? And then I did a quick look up when you were talking there. So my apologies.
No, I don't have that much influence, that's for sure. It's been an absolute pleasure. No, I really enjoyed chatting with you guys, and love what you're doing. I tune in. You've probably seen me stick my head in every now and then, especially when you're going live. That's awesome. Keep up the great work.
Beautiful.
Thank you.
Thank you.
See you later.
Cheers.
Take care.
See ya.
Bye.